Hello, guys. What is happening? And welcome to tonight's live stream. Happy Sunday if you're in Canada. I hope you're having a great long weekend. I know everybody's got the day off tomorrow. No rest for the wicked here because US markets are open tomorrow, but they're actually closed next Monday. And I always feel better when they're shut for some reason. It just feels like a greater day. But anyways, guys, today's live stream, I've got a bunch of live streams that I want to go through. So I'm slowly going to work through these. I'm going to try and not bombard everybody with loads at once because I think it's important to see each and every one because there's so many important things that are going on right now. So if you've been following this channel, you will know that I've been saying for a long time now that rising interest rates are going to cause corporate bankruptcies and insolvencies and all that kind of stuff. I mean, it's logical, right? When you have the bond market collapsing, which has been happening for quite a while now, you're going to have a contagion effect from that. And the end result of that will be higher unemployment. And you have to look at how levered up the private sector is. So, private sector debt to GDP is a good way of looking at it. So, I'm going to bring it up right now on your screen. So, let's flick it over. So, this is Canada private debt to GDP. So it is, as you can see, at like an all-time high. Pretty much, well, yeah, it is at an all-time high. Like it's never been this high, and it really started after the global financial crisis. Deja vu. Hair looks great. Thanks a lot, buddy. Yeah, it was getting too long and starting to annoy me. And we're going to Mexico not that long, so I don't want loads of hair on my head. It's going to be hot there. Thank goodness, because I am sick of the cold weather in Calgary. Still feels like winter when I go out for a walk in the morning. Like there's frost advisories tonight. Ugh, just horrible. But anyway, if you look at this private debt to GDP, you can see it's all-time high. Let's bring up the US private debt to GDP and check that out. I think that's an all-time high too. I think we'll find. Let's crack that one. Yep, US private sector debt to GDP again, all-time high. So what does this mean? Like, what does this mean? That's the real important takeaway from this. And what it essentially means is it means private businesses are extremely levered up and they might be levered up in the stock market. A lot of them here in Canada are levered up in the real estate market. And yes, I'm talking about private businesses levered up in the real estate market. And the thing is, what happens is when debt and interest rates start rising, it's difficult for those businesses. Some of them have fixed like term debt, so they might have 5 years. Every 5 years, they got to roll over that debt at the new rate. A lot of them have variable debt though, and then obviously your bigger corporations, your larger companies that are publicly listed, they can even issue shares to raise capital and everything like that. And this is the bizarre thing that I need everybody to understand. Like, because interest rates were dropped so low during 2020 and 2021, basically what a lot of publicly traded companies did is they thought, hey, we can issue bonds, we can lever up at this ridiculously low interest rate and buy our own stock. So they did stock buybacks. Stock buybacks were all the rage. And eventually, those same stock buybacks are going to turn into stock issuance, as in issuing shares, diluting the price. Because the fact is, interest rates rising, these businesses are now holding on to a lot of debt, and they're going to have to reverse course on what happened. So anyway, that's kind of a different story altogether. But the picture in your head is that debt across all these levered up Western countries, New Zealand, the United States, Canada, all these places is at all-time highs right now. So obviously, when interest rates are going up, that's going to have an effect on those businesses. But the end effect is unemployment. And right now, we're seeing the business insolvencies and bankruptcies tick up to 2020 pre-pandemic levels. So that's happening. But I do not think that's going to stop. I think this is part of a larger trend, as I've said. And now the mainstream is just starting to pick it up and report on it. So we'll take a look at this article that came out from Better Dwelling. Canadian, and you could just replace Canadian with US or New Zealand or Australian. Well, not Australian. They haven't really put their interest rates up much, but any of those you can replace it with, because I know bonds are high in all three of those countries. So I know for a fact businesses are paying a high amount, higher than they've ever paid for debt, which they're just not used to. And it's incredibly interesting. And first of all, before I get into this, what I just want to explain is the mechanics of why that happens. So if you think about the bond market and you're going to buy some debt of a business, well, if that debt is yielding you 3%, you're not going to buy it because the rate of inflation is well over 3%. So you're at a complete negative return. So instead, you're going to look at some other investment opportunity instead of buying that debt. And that's exactly what's happened. So more and more people have sold. And now we've kind of had a pause in that bond market crash over the past like 2 to 3 weeks or even month. But it's still like when you see some of the bond levels, it's just insane. We've only really seen government bonds have a little bit of a bounce. And it's incredibly interesting because the bond market, the whole foundation of lending. And I was listening to a podcast by Macro Alf and George Gammon. It's on George Gammon's Rebel Capitalist Spotify channel. You can listen to it. I was listening to it whilst I was working on my car. Macro Alf is fantastic, and he's like an ex portfolio manager, massive $1 billion portfolio manager. And he was saying, like, you know, the bond market essentially dictates the interest rates. Like you and I think it, well, I don't anyway, but some people think it's the central banks that decide the rate. But as I've said in other videos, we know full well it's not the central banks that decide the rate. And I've done videos on that. If you haven't seen them and you're a new subscriber, first of all, thank you for subscribing, but go check those videos out. And whilst I just remember that, please click that like button. Some people need to be reminded, okay? Don't shoot the messenger. But yeah, you clicking the like button is doing your part to help this get out and maybe help somebody learn something new or realize something that they're in maybe a risky position and need to de-risk. So anyway, Canadian businesses are going broke at an unusually fast rate due to inflation. Is it due to inflation? Yes, I would agree with that. But this is sort of misleading because it's inflation that's causing the rates to rise. And this is what I've said before as well. Sorry, I'm taking so long to get into this, but it's all golden when you really think about it. Is like if inflation is high and central banks start dropping rates into that could just expedite the sell-off in the bond market. The bond market could actually collapse because then essentially you've got people are just like, what's the point? Like the central bank is now dropping the rates. Inflation is still high. I'm going to get even less of a return. Like, why am I buying these bonds? So everybody is just going to start selling and there will be panic in the bond market. And you got to think, guys, the bond market is the foundation for everything. It's the foundation for all lending. And this is a bubble economy based off credit expansion and lending. So if you have the bond market that stops working, that's a big, big problem. And, you know, they had problems like this in the Great Depression. And we keep seeing headlines come up saying, oh, longest losing streak in the stock market since the Great Depression. don't think that that's any less of a coincidence than you and I know it is. Like, there is something big that is wrong. Crime is going up everywhere, as you know. The picture looks bleak, to say the least. Like, that's why I'm looking to get out of this country, many other reasons as well. But looking forward into the future, I just see a disastrous path for places like Canada, which are entirely dependent on the bubble economy. So, Canadian businesses and insolvencies are back after being quiet over the past few years. Data from the Office of the Superintendent of Bankruptcy Canada, OSB, shows business insolvencies jumped in Q1 2022. High inflation and withdrawal of support drove filings back to early 2020 levels. Experts see this as the beginning of a bigger trend, with higher rates expected to add more pressure. And I agree with that. I think it's the start of a bigger trend. And what you have to remember as well, guys, like this has took a while. Like, think about the time since rates started rising, since the market started pushing up rates in October for businesses. The market did that, not the central banks. Remember that the market did that. And since then, it's took this long for insolvencies to rise to the levels that they're now pre-pandemic. So that's interesting, isn't it? Because that's quite a long time. So how long do you reckon that ship takes to then turn around once bankruptcies start spiking? Obviously, that ship isn't going to turn around in a week or 2 weeks or a month. It could take months. It could take a year. Who knows? It depends how bad it's really going to get. But the thing is, again, plugging that podcast from the Rebel Capitalist show, and it's also on George Gammon's, I don't know, but it's on Spotify anyway. But I think it's on George Gammon's YouTube channel as well. But it was incredibly interesting listening to those two guys talk about everything that's going on right now. But the fact is, these bankruptcies are just going to go higher, and this is just really the start. And it's like, when he describes it from the aspect of being like $1 billion portfolio manager, that's really interesting. And they talk about BlackRock, they talk about all these companies that have bought real estate, and I think it's really interesting for people to listen in on that, because they explain it a lot better than I do about what's going on with BlackRock and everything like that. But a lot of people mistakenly think that BlackRock buying real estate is a good thing. They don't really realize the nuance of how BlackRock's business model actually works. BlackRock, Blackstone, whatever you want to call it. And it's the same with all these pension funds that buy up real estate. And, you know, in 2008, they were buying up entire subdivisions in Florida. And I saw an article I put on my Twitter the other day, the other week, that was a pension fund buys an entire subdivision in Florida. And I literally said, 2008, repeat. Like, what? It's uncanny sometimes when you hear these things. So Canadian business insolvencies are up 33.8% from record lows. So they are up from record lows, remember. So because obviously the stimulus money, businesses weren't going bankrupt at that time. Canadian business insolvencies are approaching early 2020 levels after a surge last quarter. The OSB reported 807 insolvency filings in Q1 2022, up 10.1% from the previous quarter and 33.8% higher than last year. There is a base effect making the annual growth sound a lot worse than it is. I agree with that. However, this is still very rapid growth, which can be worse than just normalization. And let's face it, guys, it's not going to be normalization when you really think about it. So it basically shows how it's been ticking up here from Q1 2021, Q4 2021, Q1 2022. So it looks like it's added a third over a year. So, which makes sense because they said 33.8% or whatever. Dummies, stop looking at the bars. Oh man, sometimes I need to read. Eliminating any sort of seasonal change, the rolling sum over the past 12 months is rising too. Businesses filed 2,648 insolvencies in the 12 months ending March 2022. This was an increase of 7.1% when compared to the same period last year. It's not just a seasonal skew. Canadian businesses hit by inflation, withdrawal of government support. The first thing that probably comes to mind is those darn rate hikes. March is the last month in the first quarter, so businesses had only faced a minor rate hike at that time. Insolvency experts attribute the issue to high inflation and withdrawal of government support. High inflation is even crushing the bottom line at big companies. As for government support, Q1 2022 is the first quarter many businesses had the training wheels taken off. It appears it's not going well for some, and it really isn't. And you know what, guys, when you think about it, like when we discussed inflation, I think it was a week ago, and I was telling you about the inflation statistics, or maybe I was posting this on Twitter, and I post a lot of good stuff on there. And yeah, you can follow me on there at Market Mania CA if you want to see what I'm posting on there. But I think it was on Twitter that I posted, like, when you look at the CPI that was reported for Canada and the amount food went up, it was something like, I can't remember, so I'm just going to make statistics up for this, but it was something around 9% was how much food rose over the last year, or I can't even remember. I think it was over the last year that was, but anyway, it doesn't matter, it's irrelevant. But anyway, the amount that the restaurants put up their prices for eating out was only 6.3%. And I think I'm sure we did a thing on it. And I said, like, who's paying the spread between what the real inflation is and what the food costs? And it's obviously the business, unfortunately. And restaurants were unfairly targeted during, obviously, everything that happened over the past 2 years, and they are in a terrible position. I feel so bad for them, because obviously nobody who owned a restaurant could have ever foresaw this happening. And I guess if you own a restaurant, you just got to make do with what you can. And lots of restaurants have pivoted into, you know, takeout, like DoorDash, Uber Eats, skip the dishes, all those type of things. But the thing is, guys, like them taking on that kind of cost, think about the amount of debt they've got from the past 2 years. Think about everything else that just, they probably haven't even got to capacity levels that they had before the pandemic started and everything like that. So it's really sad, really sad. But it's not just food like restaurants that are also absorbing that cost. It's also Walmart, it's other places. You know, in even these tech companies like Netflix, you know, they up the price and people leave. And I'm sure Amazon is going to do the same. And then people are going to leave and cancel their Prime subscription. I mean, these subscriptions are so easy. And I was saying this, I was short in Netflix's stock in January. And I was saying, there's no way. I was saying, with inflation this high, there is no way that Netflix is going to do any good. Because when I looked at stuff that we could get rid of, I analyzed it every year. And I think it's a good thing that everybody should do. Just go through everything. What's your monthly expenses for everything, and cut what you don't need to make spare cash. And then you can invest that cash or do whatever you want with it. Spend it on yourself. I don't know. But anyway, we looked at Netflix and we were like, we don't watch much TV. Like, I don't watch much TV. You know, when I'm up, we were just up watching TV, and I was just like, I got all these live streams to come out. Like, why am I watching TV when I'd rather come on here and do a live stream? Because it feels like I'm giving something back, and I have great enjoyment of doing this. But the thing is, like, we canceled Netflix, and I thought, loads of people are going to do this because it's just obvious. It's just the easiest thing. It's just, you log into your account, you cancel it. They make it so easy. And of course, that's what happened. But it's not just Netflix. It's Spotify. It's all these streaming services that people just aren't loyal to them. They're saturated with competition. There's Amazon Music, there's Apple Music, like there's all these different ones, and they all have different trials and whatever. And people have been rinsing those, going from one to another to another. I'm sure making up email addresses and everything like that. And I'm not saying you do that, but definitely a lot of people do that to just get it for free. I'm sure it's a lot of effort to go through, but I'm sure people do it. And it's just like, I don't know. It's kind of ridiculous when you think of it, and obvious in my opinion. But we kind of went off on a tangent there. So we read that. So business insolvencies are approaching typical levels, but they're expected to rise further. The number of businesses becoming bankrupt or filing proposals is growing and likely to worsen under the stress of inflation and the cracks beginning to show following the withdrawal of pandemic-related government support, says whatever chair of CAIRP, an organization representing insolvency professionals. Businesses haven't escaped higher interest rates either. That problem just hasn't materialized yet. With inflation now at a 30-year high and the Bank of Canada looking to correct with several interest rate increases this year, it stands to reason that we could see even further surges in the rate of business insolvencies, says Breton. Now, the interesting thing is, guys, when it comes to interest rates, like obviously the market's cracking, the housing market crashing, really the central banks, they're trying to bring down the housing market. They're trying to reverse the wealth effect. That's exactly what they're trying to do. A lot of people are thinking like, oh, they're going to come in any minute now and they're going to start QE and they're going to stop raising rates. But the reality is, because of inflation being so high, like I said, with the bond market, and this really arms you knowing something that the average Joe and Jane just do not know. And it's very simple to understand. Like the average Joe and Jane, they don't know what the bond market is. They have no idea. You guys know what the bond market is. It's the foundation of all lending. It's lending in itself. It's where debt is sold and bought. And there's yields on that debt that fluctuate with the price of the bond depending on what it is. So anyway, the bond market sets the interest rate, not the central bank. So the bond market was setting the interest rates higher from October. And it's always been the same case where inflation rises and the central banks have to follow the bond market to stabilize the financial system. Because if they do the opposite with high inflation, it's a toxic recipe, guys. It's a really toxic recipe. You want an example? Look at Turkey. Turkey is a massive economy, and look what's happened there. It's an absolute disaster, and that is because of policy mistakes from clowns in the Turkish government. But don't think that that couldn't just happen in a place like Canada or a place like Australia or a place like New Zealand. Now, that's never going to happen in the United States to a certain degree because it's the global reserve currency for now. But in places like Canada, New Zealand, Australia, certainly that could happen. So you have to really watch. And, it's interesting, guys, to say the least, being in this sort of position where the economy is. The only way I could see them being able to cut rates is if inflation goes down. And it's like I was saying the other day, I don't see inflation going down. Just look at the exports coming out of China, how much they've dropped. They dropped down to 2020 levels. Think about how bad it was in China. Their exports have dropped to 2020 levels. That's going to hit us around November, December, when everybody, well, not everybody because of inflation, but people are going to be out buying the most goods because Christmas is coming. So it's like the perfect storm I see. I just don't see inflation going down. And now with the revamp of China and the fact that they're getting out of all these, I don't want to say the L word because last time I don't even want to go there. But anyway, because of what happened in China and now it's starting up again, that means oil prices is just like, it's bullish for oil. It's bullish for gasoline. And that is also a massive part of the economy, huge part of the economy. And it's a huge part of the CPI too, for that reason. So I don't see any of these things coming down at this point. And if my viewpoint changes, then I will definitely let you guys know. You'll be the first ones to know. But right now, I just see more inflation and I don't see anything improving. So insolvencies tend to paint a better picture than reality for Canadian businesses. We only have January 2022 business closure data, so far behind. This is so esoteric. Canada and statistics is just one of the worst places in the world. It's exactly like China. It's like trying to get blood out of a stone. It is trying to find data and statistics for different things in I nearly said China, maybe China, Canada, I don't know. But it's so difficult. And January data, we're in May. What are they doing compiling these statistics? Why on earth aren't we getting April's data? We're looking at January's data. Like what? I mean, I'm speechless. It's significant. Oh, right. Basically, they're saying about the closure data being significantly higher than the insolvency, so it might contribute to more. But January, obviously, a lot of places was still in the L word. Not every business. I'll just call it Loch Ness. they were all in Loch Ness. Yeah, that can be the new code word. Not every business that closes results in an insolvency filing. Some businesses wind down in a more orderly fashion, but many shift the shuttered business debt into a personal liability. Those liabilities can add up to a completely different problem later. Small business owners often overlook formal steps that can be taken to wind down business. Simply walking away from the business instead of seeking counsel from a licensed insolvency trustee eliminates any opportunity to restructure the business into a growing concern, or if that cannot be achieved, to optimize the recovery for creditors and employees, he explained. Canadian businesses are getting hit from all sides: inflation, real estate, and rising rates. The recent surge can be a normalization of filings, but the growth is substantial and sudden. Filings are just approaching historic levels, but doing so at a rate that may blow past those numbers. It's worth keeping an eye on this to see if it's normalization or something worse. It's obviously more than normalization, isn't it, guys? I mean, you don't have to be a rocket scientist to work that out. It's because of how much debt costs are rising. And really, we're just beginning to see that come to fruition. And what does that cause? It causes higher unemployment. What does that cause? It causes more foreclosures, more people going bankrupt, defaulting on debt, all at a time where you've got to remember the central bank is sucking money out of the system. They are taking money out of the banks. And we already did that live stream the other day showing you how there is problems in the banking system. And we don't have a direct view into the banking system, but we can look at these things and say, has this been a problem in the past? Yes. Did anything result after that problem hit? Yes, it did. So we know it's a sort of reliable indicator. And it's just going to keep getting worse. I don't see this getting any better. I mean, who is going to buy a corporate debt bond that yields 3.5% when, like, who's going to buy that? And then you get onto mortgage-backed securities, it's just even more of a joke. They yield even less, and they are like no safer than corporate debt. Like, I don't understand, but anyway, like, it's a manipulated market, as we know, mortgage-backed securities and everything like that. But what you really got to think, guys, is the government and central planners, your central planners and government, they believe that there can be a soft landing. And even the banks probably believe that there can be a soft landing. But let me tell you something about the credit and debt system. It's only designed to go one way. You essentially go, if you imagine you're in an elevator going up a skyscraper, you just keep going up, but you can't go back down. The only way back down is to jump off the roof. So eventually you get to the top, you get to the top of that building. Well, now once they try and reverse that, you've got to jump off the roof. You've got to jump off the roof to get back down. That's essentially the financial system. It's a one-way street. There is no expanding and contracting a bubble. It's either expanding, or you try and contract it, it's going to burst. So the thing is, that's just the point, which is hilarious. The central planners and central bankers, they want real estate prices to go down because they want people to stop spending money. And they know that real estate attributes to the bubble economy because people pull out home equity, whatever. And the same with stocks. People pull out their RRSP, their 401k, whatever it is. When times are good, people are thinking, yeah, I'm going to cash out some of that, spend it. But when things are bad, people aren't doing that. People aren't cashing out of their home and renovating the kitchen. Come on, it's like not going to happen. So it's really, you've got to, the more and more I think about this economy as a bubble, the more I realize it is a bubble. I look around and think, God, everything just comes back to this bubble of real estate or the stock market. Like it's one of the two. Everything, like so many different businesses, architects, lawyers, like you name it, so many of them have been built on this. And it's just, anyway, guys, this is one of the warning signs, and it's starting to enter the mainstream. It's starting to happen. So what do I expect moving forward? I expect by the fall we're going to start to see unemployment tick up, and it's not going to probably be that substantial, but we're going to keep a close eye on what happens with unemployment. But it's just going to keep trending in the wrong direction, and people who are going to be most in trouble are going to be the people who are living in the cities, the people with the high cost of living, those people who bought the hype, they bought the bubble, they got in with FOMO, they paid too much for a house or whatever it is. And those are a lot of the people that are panicking right now in the real estate market. My girlfriend just said she saw an article, double-digit declines in Surrey, BC now. So, when was the rate hike, guys? We're in May. It was in March. So think about that. We're 2 months into this. Double-digit declines, and add inflation to that. Add a couple of percentage points of inflation to that, because we saw 1%, 2%, nearly 3%, pretty much 2.5% since then. So if they're saying home prices went down 13%, well, according to the CPI, they're down 15%. And if you really double it, then they're really down 17%. So it's kind of insane when you really think of it like that and reverse engineer what they're saying. Remember, real estate boards, they don't give you real home prices adjusted for inflation. And that is what matters. Adjusted for inflation home prices, not these monkey nominal numbers. They don't matter. You want to know what the actual real estate prices are adjusted for the government's monkey numbers of the CPI. And then you can also back it to yours. But anyway, guys, that's basically what's happening. It is the cowboy of the Wild West. Let's see what's happening in the comments. Oh God, yeah, monkeypox. I heard about that. Trent, Luke, how is the Calgary market? Well, it's barely positive right now. So for all the hype that I've seen around the Calgary market, adjusted for inflation now, year over year, it's down. So, everybody was pumping the Calgary market so much in February, and so many people have moved over here. But what people don't realize is somebody like me who listens knows that that's a pattern, and it's just a repeat. It repeats every single time with bubbles. So the same thing happened in 2016, 2017. funnily enough, one of our landlords was actually from BC, and they couldn't sell their house at a loss, so they had to move back to Vancouver. They did end up selling at a loss, but we were actually living in there, and they said they didn't want to actually leave Calgary, but they lost their jobs. So go figure. Like, Calgary is extremely exposed because businesses here have such a high amount of debt. Now, do you think the average millennial knows that, who's moving to Calgary and getting into a rental? No, they don't have any idea. In fact, their parents are probably going, yeah, the oil prices are really high. What about the active oil drilling? Is there much of that going on? Oh, nah, that's at like all-time lows. But forget about that. Nobody wants to invest. Like, come on, guys. I mean, Calgary, it makes me laugh, and it gets me annoyed because, like, I'm here. I know what's going on here. So when I see these clowns, like, I know roughly what's going on in Ontario and BC, but I'm not actually there. I mean, I was in Vancouver Island a lot last year, and I saw what was going on there, so I can report on that. But you know, I'm actually here in Calgary. I see what's going on. So home prices year over year down. What does that tell you about Calgary's market? Again, like I've been saying the whole time, one of the weakest in the country, yet people are trying to say it's something great. Like, again, these people, you have to remember, they don't understand the macro environment that we're in. They don't understand the business environment that businesses are in. All they understand, most of them, is real estate. And they are mortgage brokers, they are realtors like Steve Suretsky or other people. And they're right here on YouTube as well, doing the same thing. And they get a following of people who just want to be reaffirmed that, yeah, everything's great, everything's doing great. You know, that's the easiest way to grow a channel if you're just peddling that, going with the trend of what everyone wants to hear. I've been counter trend the whole time. Now people are starting to report on the same thing that has been the space I've been reported on. And now I'm feeling like, you know, I feel a little more, I'm sweating more because I'm like, usually when everyone's reporting on something, that's not a good time. But I know that this is bad. But you know what, guys? It's just insane. It's crazy. Thanks for asking about that trend. But yeah, it is really, really crazy. You know what, Trent? The Canadian Real Estate Show, I actually went on there and, you know, I said my 2 cents about everything I believed about the real estate market. And I can remember I went to the video, I looked at the comments, and they were pretty bad. Like, people were trashing me like pretty bad, which I expected because this is like a recency bias show where everybody is looking, like I said, they want them to tell them what they want to hear. That's why they go there, to listen. And obviously I was just like a counter argument to everything that they were saying, and I backed it up with actual, you know, facts and figures. But again, like, nobody wants to hear that. They would just rather pick like little tiny pieces that make no sense, like say, oh yeah, he was wearing a blue shirt, like he's an idiot, or whatever like that. But it just goes to show, like, when I see comments the same thing on my channel, it's always interesting because I always think, like, you picked on that little, like, you writ a whole comment around that little 5 seconds, and there was so much more going on in that video. And I just think, wow, like, that's I don't get that. I was like, surely you should have more questions than just worrying about that little 5 seconds or whatever. So it's kind of insane. But anyway, TK Turnip Kid, who is that? I don't know. But anyway, yeah, it's kind of crazy. You know, I don't have anything against these guys at the end of the day, but at the end of the day, they have something to sell. Like, I don't come here to make money. I don't need to do this. I come here to give back, as you guys know. That's why I've been pumping out 2 videos a week since this channel had nada subscribers, nothing. So, anybody who comes at me and says, yeah, Luke, you're doing this for the money. Remember when I spent like $2,000 on equipment, mics, and everything like that for the channel back in October? And like, I'm just like, I wanted to spend this money to put this into this channel. And, it's kind of insane. But anyway, guys, I'm getting off topic. I'm rambling on. You guys have kept me rambling on in the comments. But anyways, that's the heater. That's why it's orange. There's not a fire there. It's just so cold here in Calgary. Well, it's not so cold. We just don't have the heating on because it's meant to be summer. But yeah, and I feel bad for those people who moved to Calgary, by the way. Well, I don't actually. I feel good because they're getting a taste of the real Calgary weather, which is absolutely SH. You complete the rest. Anyway, guys, I will see you in the next live stream, which will be tomorrow night, probably. We got a lot of different things to go through. Home equity lines of credit are next in the firing line on my watch list. We've got a lot to cover with home equity lines of credit. So stay tuned for that. Yeah, the GTA is getting really beaten up. Thanks, Trent. Revert to Means is in the house. Great channel Jared's got there. Love speaking to Jared. We should get you back on here sometime. Thanks for that, buddy. So anyway, guys, I will see you in the next video. All-nighter, Trent, Prashant, Daniel, all you guys. I'm going to butcher some of these names, so I'll stop there. Anyway, guys, I'll see you in the next one. Please hit that like button so the stream just gets bumped up so more and more people can see it. That is much appreciated. Have a great long weekend, and I will see you tomorrow. Take care.